Welcome to Step 5, Cash Flow Settings, the 5th training video in a series of 7 to get you up and running in Calxa. This video will guide you through the process of setting cash flow settings for individual accounts in Calxa. Once again, as per Step 4, I'd like to point out that a detailed analysis for preparing a cash flow forecast is available in a support note called Preparing a Cash Flow Forecast. Also, for many organisations, Calxa default cash flow settings will be suitable. However, Calxa Premier users can edit the default settings with the procedures set out in this video. Click Cash Flow Settings in the main ribbon and your organisation's chart of accounts will be displayed, with the exception of your nominated accounts from Step 4. These accounts will be excluded. Each account has a corresponding cash flow type and default tax code. The default tax code is updated from your accounting file, with the exception of QuickBooks, as tax code associations are not available to integrated applications. Please review these tax codes if integrating with QuickBooks by selecting the appropriate code from the drop-down menu. For cash flow type though, select the account that you would like to change and then use this drop-down menu to select the appropriate cash flow type. Income accounts in Calxa default to debtor days, while expense accounts default to creditor days. A payment profile is calculated based on your outstanding debtor or creditor balance as shown here. If you wish to change this, you can set a custom profile. The values in here are a percentage which will add up to 100. The current month field indicates the percentage of invoices that will be paid in the same month as they are issued, and the 1 month field indicates the percentage that will be paid the month after they are issued, and so on. I'll set this to 50% upfront and 50% in 2 months' time. Note, you can select and edit multiple accounts at once by holding down the Shift key or selecting them individually with the Control key. When you're done, you can click the Save Selected button to save the settings you are currently editing, or Save All to save all changes. At any point, you can also restore all default settings. Calxa will attempt to recognise depreciation and amortisation accounts. However, this is based on common abbreviations in the account name, so you should ensure that these accounts are set to none. This is because budgeting on these accounts does not cause a cash flow effect on the bank account. Please also note when budgeting on accounts with a cash flow type of none or schedule that you must budget for both sides of the accounting equation. For example, with depreciation, you need to budget for the expense and the accumulated depreciation. Otherwise, your budget will not balance. Calxa balances most budgets for you, however cannot do this with cash flow types of none or schedule. This is explained in detail in the Preparing a Cash Flow Forecast support note. This concludes Step 5, Cash Flow Settings. The next video in this series is Step 6, Cash Flow Charts and Reports. For additional help or support, feel free to call 1-800-733-249 or email helpme@calxa.com. For sales related inquiries, please call 1-800-733-149 or email tellmemore@calxa.com. Thanks for watching. Bye for now.